Hello everyone, welcome into the channel. My name is Brent. You're doing everything right, weekly deposits, staying consistent, but your portfolio isn't moving, it's flat, and it can feel discouraging. Today, let's talk about how to stay disciplined through those quiet weeks and why they're more powerful than you think. So in today's video, we're going to go ahead and cover how to stay disciplined when your portfolio doesn't move. The portfolio might be flat, but your habits are not. That is how wealth builds. I would really appreciate if you guys go down below, give this video a big old thumbs up. And if you guys are interested in building long-term wealth by staying consistent through simplified investing challenges and real transparency, then definitely go down below and subscribe. So first of all, number one, why this happens. Why do we feel discouraged when we're investing in our portfolio doesn't go anywhere, right? There are market cycles. Not every week, month, or even year is going to be exciting. There's going to be periods in the market to where the market doesn't do anything, absolutely nothing, right? Now, flat performance is not equal failure. This is some of the best opportunity out there. So weekly investing by dollar cost averaging is about share ownership. When the market stays flat, you're able to deposit, say, $100 and buy a percentage of shares. Versus if the market just kept going higher and higher and higher, your $100 would have much less share ownership that you'd be purchasing in shares, right? You were able to pick up, say a stock is $100 and you invested $100, you buy one stock. That stock went up to $120. You're now able to only buy 0.8 of a stock, right? So if it stays consistent at $100 for quite a while, you build up shares and shares and shares. And eventually, once it's found a support for a while and it's beginning the business is booming, economy is booming, then the market begins to move higher. So again, weekly investing, monthly investing is just about share ownership, not about that daily value. Here in the example down below, we have 2022 to 2024. This is a 2-year period here. In around March of 2022, we had a death cross. Generally, death crosses indicate that the market is going to have a much further downtrend from there. And guess what happened? Downtrend happened in March. We didn't hit a bottom until around August of 2022. So from March to August, that's about 4 to 5 months in there where the market just trended lower, lower, lower. Finally, it bottomed out around August and began kind of trending upwards, right? We hit that golden cross, which is a positive indicator. The short-term momentum, that 50-day moving average in the orange, crossed over the long-term, that 200-day moving average in the blue, and showed positive movement. And it still took 3 to 4 months of side trending right there before the market said, hey, this is our new support level. Let's go ahead and kick off to the races. And then the market kicked off, positively. Between January 2022 and January of 2024, if you take that 2-year period, the market in 2 years moved up 0.09%. So that was the opportunity right there to just be buying and buying and buying up more shares. So hopefully, share consolidation. Here we are, 2025. We had a death cross in April of 2025, meaning once again, that was a pretty negative indicator that the market could bleed off much more. But what came out there was a lot of 90-day periods, tariff relief and agreements coming to the table, right? They postponed tariffs for 90 days. And immediately, instead of continuing downtrend and bleeding out even further, the market quickly recovered. Here, short-term momentum in the orange quickly recovered and skyrocketed the S&P 500 and all markets across the board, pretty much back into all-time highs, very green. We also saw the golden cross indicator here towards the late of June 2025 when that 50-day moving average crossed over that 200-day moving average and indicated another golden cross. Now, right now, between July 2025 and potentially, anywhere from the next few weeks to the next few months or even a few years, we could be trending up and down in a bit of a slish-slosh depending on other fundamentals out there in the market, like liquidity or the economy, inflation, and there's a ton of factors that go out there. Generally, the golden cross is a good indicator that the market will move higher, and through history has done really well after the golden cross. But every time is a little bit different. So give it time. We're gonna have a little bit of a sloshy momentum period, and then we could potentially move higher from where we are now today. Number two, what discipline really means. Discipline means to continue about your habits without needing to be motivated. You don't need to be looking at your portfolio and hey, you got that euphoria from seeing you're up 1%, 5%, 10% in a day, a week, or even a month, right? Sometimes discipline is just staying consistent, dollar cost averaging. Invest comes from successful habits, not hype. So long-term wealth is generated by that boring style of investing. That's why ETFs, exchange traded funds, are so popular, because you can just buy, hold, and continue to dollar cost average. And 20, 30, 40 years down the line, you're pretty much guaranteed to be a millionaire just by depositing, a couple $100s per week, per month, and just continuing to dollar cost average with that 7 to 10% average return per year, compounding for that lifetime that you're invested. It's all about staying disciplined, and boring is good. When you're buying into those hype stocks, buying into the hype crypto, while you can go up several percentages at a time, it can also come back down several percentages at a time. Versus if you're investing in the slow and steady, boring investments, main direction 70% of the time is to the upside. Number three, your goal is ownership, not hype. Once again, you're buying real assets. In my examples, I generally like to talk about SPY, or VOO, which track the S&P 500. In my SoFi Investing Challenge, we're buying up VOO every week. $25 is going into the account, and it's buying up $25 of the ETF. Let me know down in the comment section down below, what is your investing goal for this year? What are you investing in? Are you investing in individual stocks? Are you investing in ETFs? Let me know down in the comment section below. And also drop a comment below if you're still making deposits every day, regardless if the market is green or red, right? A lot of people, when the market hits these all-time highs, they stop making deposits. Like, you know what? Instead of dollar cost averaging into the market, I'm going to deposit into the account, but I'm going to hold off from investing it, right? I'm not going to be buying up those shares while it's not doing anything, right? Don't do that. Focus on how many shares you can buy that you own. The more shares you own, once it supports, once it trends for a while, building up that support, it's going to move to the upside. And it's not always about the dollar value alone. When the market moves higher and you own more shares, you're going to get a total capital appreciation much higher versus if you own, say, 100 shares and you finally decided that you see the market moving higher, and that's when you're starting to invest as the market's moving higher now, versus if you just bought 100 shares but as a base and then started adding 1, 2, 3 shares per week, per month. By the end of that first year, you'd have 200 shares when the market begins moving up at $100 average price, versus just having 100 shares at $100, and then the market starts buying up. So you'll be able to buy, say, 25 to 50 shares as it's rising higher, versus you consolidated and bought 200 shares early on. So number four, my story time, right? When I started investing, I barely noticed my balance was moving. That's how it starts off, really. Even looking back at our SoFi Investing Challenge, right now we're adding $25 a week, and it starts looking just like this graph. This was our M1 Finance portfolio. We were just adding about $115.38 every week, and it looks like it doesn't move. But then you step out, and here was 2019, 2020, 21, 22, 23, 24, and here's 2025. While we stopped investing in this portfolio, the portfolio continues to compound and build more, shares, right? It's frustrating at the beginning, but you start to wonder, is it even working? But skip 2 years later, it does work. That momentum begins to compound and compound and compound. 1 year, you're getting, $200 to $300 in dividends eventually, right? That next year, you're doubling it up, and it's now generating $600 in dividends. The next year, it's tripling up, and you're making, almost $1,000 in dividends. And the next year, you're making $1,500 in dividends, and then $2,000 in dividends, $3,000, $4,000, right? And it just continues to compound and buy back more shares on a year-to-year basis. And it really does work. This is one of our M1 Finance portfolios right here. This probably has one of the longest long-term growth that we can see in our portfolios that's out there, right? I jump around from platform to platform pretty often, from Merrill Edge, Schwab, Fidelity, Robinhood, Moomoo, Webull, M1 Finance, SoFi Invest, right? That's 10 platforms right there, and I've used them and tried them all. But M1 Finance has a lot of that history there still. Now, number 5, how do I track my discipline? How do I stay consistent? I use a few different platforms for this, so I'll have my trackers and links down in the description below or in the pinned comment. And one of them is Seeking Alpha. Seeking Alpha is okay, right? You can put in your portfolio, you can kind of click on your individual stocks and go into some of the news in there, but it doesn't have a long-term kind of graph of your portfolio movement history. You can add all your portfolios from different platforms in there, but it doesn't give you the trend line history of your total portfolio up and downs and wealth, right? So in this case, often I use the dividend trackyourdividends.com, and I can see, I can celebrate my deposits every time I'm making a deposit into the account and it's buying up shares. I also like to celebrate my dividends every time I'm receiving dividends. We made a video recently when we got paid out dividends on SoFi, but that was the very first dividends that we generated in a brand new account. It's not just about returns. And even flat weeks are steps towards the real goal. So my real goal is to generate more and more dividends, which are able to compound going forward on a month-to-month basis. So 1 month, for example, here, I'm making about $3,300 on a monthly basis. But if I don't use all the capital that I get paid out in dividends, and I pay off some expenses with some of those dividends, if I don't need all the dividends that are in my account, those are reinvested and buy back more shares in the next month. I see, hey, in July, I got paid out $3,300. I bought back more shares and I increased my income by $50. So the next month, it's now $3,350. And once again, I pay out my expenses. I have left over. I buy back more shares. And the next month, it's increased by $30. I now get $3,380, right? And it just continues to compound and compound and compound. And that's really nice to see because every month, you're pretty much guaranteeing yourself a pay raise on a monthly basis. So that's a bit of a win right there, along with your checking of deposits and seeing how many more shares you're buying up right there. I get weekly notifications of the performance of my portfolio. Plus on this platform, I can see the long-term graph of where my portfolio hit $100,000 for the first time, $250,000 for the first time, $500,000 for the first time, right? You're seeing that momentum build up. And, it's really nice to see you hit these milestones, thresholds. They send out a little weekly email of your market overview, what the portfolios have done, like the indices, S&P 500 up 1.72, the Dow Jones up 2.3. Our portfolio was at 3.42, so we outperformed the indexes. Now, in this last week, July 6th through the 11th, we see the S&P 500 put on 0.02. The Dow Jones was down 0.4. Our portfolio was down 0.05. So we had a really good week prior, which pushed beyond the indices. But now in this week prior, this current week, we actually we underperformed, but that's expected because we had a stellar week prior. I like to see these emails. Also down below, it does also say, hey, this week you're expected to get paid dividends from these companies as well. So this is one way to track and stay consistent and disciplined is by seeing my deposits going in, seeing the dividends that are getting paid out, reinvesting those dividends, and seeing the value going forward of the shares ownership going higher and the dividends in the next month going higher along with it, right? So it's not just about returns. Now, final thoughts here. If you guys would like to start, right, start now. Even if it's just $10 a week in our challenge, we're doing $25 a week. So you guys can join the challenge completely for free with SoFi Investing or any other platform. I do have a pinned comment down below how you guys can start investing today with SoFi Invest. You open up an account with the link, you drop in $25. You're going to get a bonus of $25 just for starting. You're going to get a base of $50 just like we did in the challenge. And what we're working on is we're not just building up some sort of fund, right? We're building up freedom. Freedom is what allows you to have many options, not just today, but in the future. Your future you is going to be thanking you for starting today and just getting that going. So question for you guys, how do you stay motivated when the numbers do not change? Let me know down in the comment section below. If your portfolio is stuck around $10,000 for a while or $100,000 for a while, how do you kind of get motivated to make those deposits, make those investments? Do you look at your shares? Do you look at your dividends? Let me know down in the comments section below. And of course, once again, if you guys enjoy these videos, subscribe, give this video a big old thumbs up, right? If this helps shift your mindset even just a little bit, give it a like, subscribe for weekly updates, and download my free tracker down below to stay focused on what really matters, right? I did get a couple messages about the spreadsheet. I'm going to go ahead and be updating that to a Google spreadsheet. I've had a few individuals message me on Instagram and I think YouTube as well, a couple comments there. And they said that the PDF that they're downloading is nice, but they'd like to get it kind of simplified into a Google spreadsheet. So I'm going to go ahead and take that form, move it on over. So if you guys go to the download link and it's still a PDF, give it a few days. I'm going to be working on converting it over into a Google spreadsheet and having areas to actually enter your data a lot easier. So thank you all for tuning in. That is going to be it for this video. I do appreciate it. Have a good one. Bye-bye.